Hey guys, as we kick off a brand new week here in the market, I wanted to talk about a particular challenge that's making things really difficult for retirees and people who need to generate extra income from their savings. That challenge is low interest rates, and it's not a new story, but it's getting worse. Low interest rates are making it difficult for you to save money and then generate income from that money to pay your day-to-day expenses, whether they be retirement expenses or just basically generating a yield on that money. In fact, right now we're starting to see negative real interest rates here in the U.S. And when I say real interest rates, it means that inflation is actually higher than the interest rate that you can receive on your savings. So even if you're generating a few pennies on the money that you set aside, inflation is making those few pennies worth even less. So you're actually becoming farther and farther behind based on the interest rates in today's market. That's hurting retirees. But today I did want to talk about 3 stocks that you can use that are actually benefiting from these low interest rates and can actually turn the tide and help you generate more income and generate more wealth for your retirement. So jumping right in, mortgage rates actually hit their lowest all-time low last week, which means that people are able to buy homes for a much cheaper monthly price, and people are also able to refinance the homes that they already own to pull cash out or to do new projects on their home to help, which is very important in today's coronavirus market because many people are spending more time at home and they want to use that cash in their home to make their homes a better place to live in. This is creating some unique opportunities for income investors, and it's actually helping to drive the home market higher. So think about it, low interest rates, when you go to buy a home, you're willing to pay a little bit more because you can actually afford more because the interest payments, your monthly mortgage payments, are still affordable. And that's driving more demand for homes, and it's driving the price of homes on the market higher. So let's jump in and look at 3 stocks that are benefiting from this trend. Now, the first stock that I wanted to show you is D.R. Horton, or DHI. Now, this is the largest home builder by volume in the United States. The company owns a lot of different tracts of lands in some of the most attractive markets in the United States. And as it builds these homes, it's now able to sell them for higher prices simply because the market is allowing them to sell these for higher prices. And that's creating more income for D.R. Horton. And as this income grows, obviously the stock price is moving higher, and we're also seeing more income paid out to investors. So right now, if you invest in DHI, you're getting about a 1.1% yield on your investment. In other words, that's what the dividend is. You get about 1.1% dividend payment based on your investment. That's not great, but I wanted to point out that over the last 5 years, as D.R. Horton's business has grown, they've actually increased their dividend by 367%. And I expect that to continue because D.R. Horton's profits are going to continue to move higher. That should drive the stock price higher, and it also should drive the dividend that they pay you higher. So if you get in today, we should see continued income growth while at the same time your wealth will increase. Now, the second stock that I wanted to show you for this week is Invitation Homes, ticker INVH. Now, this one has a really unique story behind it. Invitation Homes used to be part of Blackstone, which is one of the largest private equity companies in America. Now, back during the last financial crisis, when homes were being foreclosed on and banks were going under, Invitation Homes actually Blackstone went to the banks and said, we'll buy the homes that you have, that you foreclosed on, that you own, that you don't want to own. We'll buy them, but we're going to buy them for pennies on the dollar. So Blackstone was able to pick up thousands, tens of thousands of homes across some of the most attractive markets in the U.S. at dirt cheap prices. And then they turned around these homes, they remodeled them, and they have rented them out ever since. Now, Blackstone actually created a new stock, Invitation Homes, and this company that you're seeing right now, it was spun out of BlackRock, so it trades on its own now under the ticker INVH. The company still owns those same homes. They still rent those homes, so they're getting income from those homes. And the value of those homes is continuing to move higher as real estate moves up in price in the U.S. Right now, if you buy Invitation Homes, you'll get a 2.1% yield, which is attractive. It's not super, but it's very attractive. But please remember, Invitation Homes is a real estate investment trust, or a REIT, which means that the company is required by law to pay you, if you invest, 90% of their earnings, of their operating earnings, on an annual basis. So as Invitation Homes rents continue to increase, as the value of their homes increases, you will benefit. As the rent increases, they're naturally required to pay you a bigger income, or a bigger dividend. And as the value of the homes moves higher, the stock should naturally move higher, because it tells you what the company is worth, and the company is worth whatever those homes are worth that they own. So this is a great opportunity to participate, not just to grow the income from your investment, but also to see your wealth move higher. And then the final chart that I wanted to show you today is Home Depot. Now, Home Depot benefits from all of these trends because it provides the supplies that are needed to build new homes, and also for remodel and do-it-yourself projects. So Home Depot has a very vibrant contractor business where they sell to the people like D.R. Horton who are building new homes. But they also have, obviously, the retail stores that you and I go in and out of. And right now those stores are packed because people are living at home, they're seeing things that need to be changed, and they're making upgrades to their homes. I know I am, you probably are as well. Home Depot pays you a 2.3% dividend yield. So it's a great way to grow the income that you get from your savings. But keep in mind, Home Depot has actually increased their dividend by 1,400% over the last 15 years. So as Home Depot's earnings grow, the company is passing those gains on to you. And I expect that dividend yield to move higher over the next year, or the next 2 years, over the next 5 years. So it's a great way to continue to grow your income from these low interest rates, and specifically from the do-it-yourself and the home building market that's moving higher. So those are the three great income-producing opportunities that I have for you today that can help you offset the low interest rates. Let me know what you think. The email address for us is richretirementfeedback@stpaulresearch.com, and I look forward to hearing from you. Thanks.